Hello, hello, hello. I hope everybody's having a great day, actually, a great Sunday, wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling 9th of October 2016 as we're waiting for this next presidential debate. Let's see what happens. Should be an interesting open. So, as we go into this week, I mean, there are a lot of bank holidays around the board. We got ZEW on Tuesday, we've got FOMC minutes on Wednesday. We got some trade balance out of China on Thursday, weekly jobs numbers, and then, some data on Friday, but it's not a huge data week, right? So what's going on? What's going on? As usual on Sunday, we're not here to go into all the charts in detail, etc. We're here to just try and give everybody an idea of what we're focusing on, what we think is most interesting, right? So clearly, the most interesting thing for us remain the bonds. Okay, our outlook has been, we've got a structural high here. We feel this is a big top in, and the market is being very orderly in the way it's been moving back down, right? We had a nice bounce right at this big support zone, and what we said is if this move is strong, this is the healthy place for it to bounce. We expect it to come back into this multi-confluence previous resistance support zone, moving averages, descending trend line, the whole shebang. And if this move is for real, we expect this area to get sold hard. So far, so good for the shorts. We've closed back down. You actually got a fairly, a bounce off the bottom here is very heavy on Friday, but this for us continues to be heavy. So especially if we hold below this zone, we'd expect the 62s to come into play fairly quickly. Any bounces we suspect will be shallow, so we'd expect max into those 68s, bounces to be shallow, resistance to cap, and again we're looking for more downside the bonds. We're looking for acceleration back into the 62s, possibly lower. If you look at the other charts, I mean, we've got a lot of ways of looking at this, but we feel there's an awful lot of confluence around this 28, 20, 158, 156 zone, right? Even if you look at the other chart, that's where it comes in, 158 zone, 158, 156. So that would be our targets there, especially if we accelerate to the downside. Now, gold, very nice action on gold. Consolidation here, nice puke, extremely aggressive. I think anybody who said they expected the velocity of move, probably you would doubt their honesty. We had a very aggressive move to the downside. So we come into the 200 again, tries to bounce just ahead of the 200 DMA, takes stops out. And what we discussed here is that we were really focused on this range, right? 1350, 1300, 1250. So we were interested in the approach to the 200 DMA, but for us, what was interesting was not the 200 DMA, it was the 1250, okay? So the question there is, 50, why are you telling me that? How would you engage around that? Well, the way we look at these moves, right, is we expect this move, we expect it to be too good to be true to just bounce at the 200. So we expect the market that has to clear weak players around that zone. And then if it bounces at the range extreme, that's where it starts to get interesting for us, right? So either you're considering this as a buy opportunity now that it's based back above, ideally it would have been above that 200, right? Or on these presses lower, right, on Friday, you're getting long with a stop on a day close above or below the 1250, right? So here it looks like if we break lower, sustained break, we'll be looking at the 1200 to attract. If we can stabilize and especially continue to get day closes above the 1250, then we expect to see a little bounce. Unless some kind of news or something really aggressive happens in the market, just pure technically, you would expect the bounce not to be too aggressive, right? 1300 to cap, but probably much before that. You could look at the 50 back of this move. It's probably 1280s, 1290s, but that's clearly a chart that's on our radar and clearly a chart which we are going to be focusing on, we'll be trading. Deutsche Bank, we're going to be looking at Deutsche Bank, of course, in terms of the market. Yes, pretty much exactly where we were. What we're looking at in terms of levels are 2165, 2133, 2100. So our expectation is still for some kind of toppy action here and for us to build towards the 2100, possibly 2050. And the price action we saw on Friday or throughout the week was basically, it just looks like the market is taking its time, not being able to really sell off hard, but it does look like it can't attract any new sellers at highs, and it looks like all those overnight ramps just keep on getting sold. So, depending on how the debate goes tonight, we might get a little bounce, but we'd still expect the bounces, whether they get up into the 50 DMA, whether they get up into the 2165s, we expect the bounces to ultimately fail and for the market to continue to try to go lower. As long as it keeps on closing above the 2133, well, the case for market trying to take out some weak shorts keeps on increasing. But, ultimately, this is a big range high that unless we get real traction above, we expect this to fail, and we think the correction is for a healthier move lower, okay? In terms of FX, no big change for us. We're starting to get this. Remember, for months, we've been talking about our expectation has been bonds downs, stock sideways to slowly build a healthy correction down, strong US dollar, weak Japanese yen, and the past BOJ and non-farm payrolls or FOMC just confirmed that for us. So, our expectations being still CAD, all this basing, nice rotation higher, right? All the way back down. Lovely support here. Our call hasn't changed. We're still looking for this to make its way back into the 135, right? Despite the fact that there's wheeling and dealing on crude. Aussie, top building here for a move back down, especially on no break into the RBA. We expect, for us, any rally into this area was a sell zone. So this is in play. We're looking for this to come back down into this whole area. Now, if everything starts to correct, then we're looking for 71s, 69s, etc. But for now the healthy move as far as we're concerned is a continuation back down into this ascending trend line, the 100 and the 200 DMA. So again, not a lot has changed, right? Kiwi, again, top. Expect this to be a big high, and we're looking for a correction back into the 69s, 200 channel. Actually, we're looking for here. This is where the game's going to be played. This is where we're looking the correction to come back into the zone, and then either we bounce, we continue this correction higher, or then we're right back down for a much nicer, bigger move. Reminder, if you want to have an idea of that bigger move, we'd suggest you look at the action on the monthly chart. It's a bit messy here. If you look on the blog, we've got a very clear chart. We've discussed this in the past sessions. And again, yen, our expectation is for correction higher. And right here, we've moved off that 100. We got sold exactly where you'd expect it to get sold. Big 103.50s, bull bear line, below heavy, above bid. We'd still expect these moves back into these 102s, 101s, this high zone. We expect to find bids here for price to try and challenge the 103 again and to slowly move back into the 105.50. Again, all bets are off in case something silly happens in terms of, on the news, something comes out of the debate. But globally speaking, our outlook hasn't changed for quite some time. We're still looking at the same things. So pretty much in line, no big change. Let's see what happens. I'm not really going to comment about cable. I talked about it on Twitter. I think people who follow know what our view is on that. Again, let's see what happens. It should be, hopefully it's an interesting week, but we're stepping up and getting ready for really interesting end of the year. So we think the potential for these bigger moves is slowly building. It's far from a done deal, but we'll just have to wait and see. But clearly it should be a very interesting end of the year. So again, as usual, guys, thank you so much for following, for sharing, for retweeting. I've seen some more comments recently on the YouTube. It's always a pleasure to get comments, get feedback, do my best at answering as quick as possible. So again, catch you around. If there's any chart we haven't covered, anything you want me to look at, just send me a note. I'll try and cover it. I'll try and post the chart. Have an awesome one. Thank you so much. Bye, guys.